October 30th, and it is time for our live event. We're not going to have any technical issues today. Sorry about that last week. We had a few remote issues with Will, who runs our program, and he is back and everything is operating well. Harry, how are you doing?
I'm spectacular. How are you, Pete? How was your week?
Things are good. Yeah, I'm kind of in a mode right now, like we have been for the last month, where we're just waiting for news and waiting for news, and we are right on the precipice of big time news. So
We
fasten your
are
seatbelts. Things are going to get pretty busy here.
less than a week away.
Exactly. So, yeah, everything seems to be going well. I'm going to take a look at my last pick. I didn't do a live event last week, obviously, but I did do a recording Wednesday, and Microsoft was the stock that I had highlighted. So let's take a closer look at that. And I liked this breakout right in here. You can see how the stock poked through the 100-day moving average. It was trying to get through this compression in here. The goal was to try and buy dips, which there were a number of dips that could have been purchased along the way. And then yesterday we had this really nice breakout back above the 100-day moving average with a good close above that 100-day moving average. And then this morning, we had a market drop after what I felt were really good economic data points and after good earnings from Google yesterday. So I kind of viewed this as a gift. You could see that Microsoft tried to run higher and it pulled back to yesterday's close, but it did not participate in this drop. So I posted about 15, 20 minutes into the open that I like Microsoft here. That was a really nice little scoop. So they announced after the close today. Gosh, I think Meta's after the close today, and then Apple and Amazon tomorrow after the close. Regardless, we've got four mega cap tech companies that are going to be announcing earnings, and that is certainly going to drive the action. And then the jobs report on Friday. So Microsoft, nice little pick. There were some opportunities to get long. And then Sunday, I showed you CLS. This is kind of a choppy stock, so it doesn't make nice, big, strong moves, but I did like this breakout here through horizontal resistance post earnings. Give it a little time to get its sea legs. I like the fact that it's been able to hold those gains, stay above AV/WAP-E. This is going to be a nice stock, but it's not one you have to chase. It's one that you're able to buy dips on. So those are our picks. And, we can start by taking a look at some questions early today. So please, if you're in the live event, post your questions and we'll try and get to them right away. I'm going to take a look at one. Good morning, Harry and Pete. Are there specific scenarios where 1OP works better than other scenarios? Yes, there are actually, and that is when you have very heavy price or volume, I should say, and steady price action, meaning that you get really nice, consistent moves. So move like that. Okay, you've got a nice cross right in here. You've got good volume. You start getting a cross in here. You start expecting a little bit of weakness. You get another bullish cross here. Yes, if you have fluid movement and high volume, the indicator is going to work well. If you have tight, compressed price action and movement, it's not going to be as reliable. There's another bullish cross yesterday. That was very nice. Then in here, you get your bearish cross. Okay, not really any movement in the market. You get your bullish cross in here, and then the market continues to move higher. If you are trading individual stocks using 1OP, those stocks will tend to trend more than the market does, sustained moves. And then you have to be a little bit more cautious because you will see more bullish and bearish divergences. And how these cycles are resolved tells us what that trend strength is.
I have a question here. What level do you expect the IBM short to find support? Um, well, I mean, you have the 100 SMA, which is below at 199.16. And then you have that sort of psychological 200 flat level there as well. So I would peg it right around there. But keep in mind, as we've been saying, you're in the middle of earnings season, right? So every one of these larger tech earnings is going to cross pollinate, right? So um, Microsoft earnings, Amazon, all of them are going to impact other stocks that aren't reporting earnings. So IBM already reported, but let's say you get some very good results, good tech results. Well, that is going to drive up the QQQ. It's going to drive up the tech sector, and IBM might just float with it or find earlier support. So all else being equal, you're looking at, a 200, let's just call it flat 200 support level there. And if you are holding an IBM short, then you would be in profit by now. I did short that stock yesterday. You might want to consider taking your profits before earnings come out tonight, and you go into the apples and all that tomorrow. So I would say, like I said, all else being equal, if there were no other earnings going on, 200 would be your support. Just looking at the chart.
Yep, and that is actually a really nice chart pattern. I'll give you a few technicals on it. Big gap down, easily breaches the 50-day, and we have follow through, which is the most critical component. So it's not the initial move, it's the follow through that you have to watch. Now we've seen in a market that is actually grinding higher, go to the 15-minute chart, get your market bearings. Market has been slightly higher and the stock is continuing to drop. So this looks like a really nice short. As long as you continue to get this watershed type of event, yes, you look for support around the 100-day moving average. You would start taking some profits on your short position. And then the key to watch for is the height and duration of any bounce off of that 100-day. If it's brief and shallow and it can't recapture the majority of this move, then you know when it hits resistance, the next time there's going to be another opportunity to short it, and then it would challenge the 100-day and perhaps even drop to the 200-day. If the bounce is tall and very strong and it lasts a long time, then that could be a meaningful support level that the stock starts to form a base off of and then grind higher. So those are the things that you need to be watching for.
A couple other questions here from Ram Kumar. What do you use to ensure to get reliable, consistent connectivity? I use fiber optic. I use AT&T fiber, but obviously, depending on where you are in the world, what's available, um, connectivity is clearly important. You want to get the best fills. You want to make sure that your connection is right. I tend towards fiber optic, but if you can't get that, you can't get that. But that is so area dependent. Not sure I get the other question. Do you, Pete? What do you consider news failure as an impetus to consider a stock? Of course, with confirmation. I'm going to try to divine the answer on that one, but if I'm wrong, Ram Kumar, as to what your question was, let me know. SMCI is an example of a stock. I actually put out yesterday and said SMCI looks great on all of the technicals, right? But knowing the stock, knowing the news on the stock, knowing that there is this sort of, and we talked about this 2 weeks ago, that there is this looming accounting issue story out there, gives you a lot of hesitation to trade it. So normally you look at that chart, and if you just took the name of the company off the chart and you looked at it, which would be a pure technical view, you would have been going long SMCI yesterday. But because you knew about the background on what was happening with the company, that should have given you pause, which is what I said in my my post. So if that's what you mean by news or news failure on a stock, that would be an example. But if you mean something else, let us know.
Yes, and also when you start talking about news and news failure, it tells me that you're trying to kind of play fundamental analysts and you're trying to gauge what the reaction should have been versus just following pure price action and using that as your guideline. So yeah, SMCI, once you start having any kind of accounting issues, uh, those are going to take a long time to resolve because you're going to have investor lawsuits and all sorts of stuff going on. So it's going to weigh heavily on the stock. It's going to take a long time to recover. And this stock has been in a steady downtrend. Just wrote an article about that today.
Yeah,
So,
you should always take that. I mean, institutions have so much more knowledge, and you know there's so much priced into a stock, particularly like the Tesla event, for example, or earnings that are coming up, that institutions will have already assigned a probability to their models. What is the probability that this will happen or that will happen? Not with anything with 100% certainty. And usually that's priced into their buying, right? So if they say there's an 80% probability that in the Tesla event, there's going to be an announcement that the cars will be ready in 2026, 20% in 2025, so on. And then it comes out at 2026. Um, all that's left for them then now is now they have 100% is the remaining 20% to sell the stock, right? So most of the move will have already taken place leading up to it. You need to be able to discern. Obviously, there are certain news posts and things that happen that are unpredictable. Those can be huge movers, right? But you can't, if they can't predict it, you can't predict it. So trying to figure out the fundamentals, as Pete was saying, on a stock, um, and relating that to what a news event will or will not do, then you also have to figure out what was already priced in to the current price action. And now you're looking at it and saying, "Oh, I don't understand. This is bad news, and the stock is going up." Well, that would be why.
yeah, and so you got, accounting irregularities, and you have a massive accounting firm like Deloitte Touche. Do you think that these large institutions might have some contacts within that accounting firm? Any kind of inkling on how things kind of might be playing out? Of course they do. Oh, but that would be insider information. So no, of course that never happens. They've got better information than you do. They spend billions of dollars on it. So don't try and second guess what the news and the reaction should be. Go with technical analysis. And when you have a stock that's in a downtrend, you have to have very firm price action and technical breaches to the upside that tell you that institutions are in there buying. Okay. They feel comfortable. They have the information. Now the stock is making higher lows and it's breaking through resistance. Now you have something that you can actually trade and watch. I do use Comcast, by the way, so I am on cable internet. It's not without disruptions, but it is quite reliable. And make sure that you do not rely on a wireless router in your home. You should have an Ethernet connection always.
Absolutely. Your, you know, wireless routers. I mean, if you have anything else, but it's not that difficult to go get run a wire and make sure you have that Ethernet directly. And it not only gives you much faster uh, service, but less prone to disruption. Um, and to segueing to what you were saying, obviously the core tenet of how we trade is relative strength, relative weakness, right? And we do that because that is a indicator of what institutions are doing. So here we have this question here from Rod. Do you think that this trading approach will always work because people always have to buy a large position over time so you can see relative strength, relative weakness? It's not really about buying a large position over time. It's about, as long as there is statistically, right? And you could apply this to anything. Just lucky enough, works with stocks. As long as there is a central indicator, SPY, right? We SPY, we chart, we looked at QQQ, IWM, all SPY is the most central indicator. When people say the market, they're talking about the S&P. So SPY is a central indicator, which means that stocks, all else being equal, if there was a no news environment, no earnings of nothing, the stocks would move, ebb and flow with SPY. However, when you have that central indicator, you can also then measure the divergence. You could see this stock is moving stronger than what SPY is. So, SPY is like that tide that lifts all ships or drops. But if you have one that is standing out because it is not it's proportionally stronger or weaker, that is only because institutions are in there buying or selling. How do we know that? Because only institutions have the liquidity to make that type of impact, to drive against the tide. So that becomes your advantage, your edge of an indicator. Look at like a green light being, institutions are in there right now. They're selling, they're selling. You can see SMCI right now, market isn't particularly strong, but that SMCI release, that's down 32%. That only happens if institutions are in there selling. So that gives you your indication of what institutions are doing. And that will always be the case. As long as SPY or any other proxy is a central indicator, that will always be, you'll always be able to measure the proportional difference.
Yep. And so this stock is toxic. The article I wrote overnight, this stock is a liar. It should not be trusted. So you don't touch it. You could
Exactly.
short it. You could short it.
Mhm.
But in an up market right now, why would you do that? You should be focusing on the long side, and it's a newsy stock. So there could be news. I think it reports earnings in a week. Well, maybe they'll be able to clarify or add clarity during that earnings release. Who knows? So, but yeah, you should not be in there trying to scoop this stock. AXP was a stock that one of you asked about. And let's see, long term swing has a long term swing on the long side, waiting to see where you can enter. And right now, AXP has this nice grind higher. It's starting to form support above that 50-day moving average. It's above AVWAP-E and the open of that long red candle. Yeah, this is a decent place where you can take a nice starter long position. Your next resistance is in this gap right here from earnings. And that is where you would, once it enters that gap, you could add to the position as long as this price action higher is nice and strong, relative strength. And then you would add on a breakout to a new all-time high. That's how you would trade it from a longer term swing perspective.
I agree. I was looking at that earlier, and it was a nice break. I like the what do you call it? It's clearly staying above the SMA 50. You have a little bit of a gap there on 1018 at 290, 279.20. But that's still $5 off. You have some strong momentum, a nice little dip, and then a breakout here. Up strong today. I like that stock. Its earnings. Earnings are well past, so you have until January. So you're pretty clear on that stock, and a lot of the financials have already reported. So when you're worried about earnings season and picking a stock and then it getting impacted by another earnings release, AXP is actually a pretty solid long here for today.
Yeah, and you also, yes, as Harry mentioned, you've got most of the financial institutions have reported. Most of those reactions were good. The key to financials is that people have jobs, they are taking out loans, they are repaying those loans, and credit issues are low. So we got a good ADP number today. 244,000 new jobs created in the private sector. Friday, we're going to get the jobs report. That is a big piece of economic information. And I think it's going to be a decent number. And I say that because of all the other employment numbers that have been coming out, the weekly initial jobless claims numbers. Believe it or not, I believe that that number will be padded a bit, and it does happen. So I think that it's going to look probably a little bit better than it is. But yeah, good number on Friday. That should support the market. And I think the earnings that we see in the next couple of days are also going to be market friendly. I say that because economic conditions have been relatively strong. GDP came in at 2.8% today. This is our first look at Q3 GDP. 3% was expected. 2.8% is not a bad number. So now you've got an entire extra quarter of earnings and profits. So the prices haven't gone up, meaning the stock prices, since July, August, and you've got an extra quarter of profits. That tells me that valuations are better than they were 3 months ago. So I think we're setting up for a move higher personally. We've also got some seasonal bullishness. Any of the mega cap tech stock earnings that you want to talk about, Harry? I know you really dive into these earnings announcements.
You know, Meta is a perennial favorite, and has been now for the past year on the institutional side. They love them some Zuckerberg. Um, I think one thing you have to look at. Obviously, you go into earnings. Meta has run up pretty much since September 11th till today. So 2 months. This thing has gone up $100, right? And one thing, and first off, as we always say, and we always caveat, do not play earnings unless you're going to do it's like a time spread, right? And we go into those. But if you're just looking at it, um, one thing that I have noticed on the institutional side is, and this is common sense as well, the more the run up into an earnings announcement, the higher the bar becomes, right? So when you have a stock like Meta that has run up $100 in the past 2 months from 500 to 600, it doesn't mean it can't continue to go up, right? I look at people who are looking at SPY right now, and they're like, well, I can't be long SPY right now. I can't be bullish on the market right now. Look at this run up. We're at the all-time high. And I remind you to go back just a year from now. And I remember, Pete, we were in the chat room, and everyone was looking at SPY at 480. And everyone was, not everyone, but people were going, well, this thing has to cool off. This thing can't just keep going. And so, you would have people online and all that trying to short the market. And look what happened at 480. The thing just kept running all the way up to 500 and it blew right through it. I'm not saying that will happen here. Obviously, there is some hesitation here at the all-time high. SPY is waiting for an impetus, and you have a lot of uncertainty coming with the election. But the mindset of you can't go long when something is run up so much. Look at the best thing you do. Take a look at the EMA. Look at the 8 or the 15 EMAs, even better in my opinion. Look at the slope of the EMA and look at the slope of the price action. As long as it's not too diverged from that, as long as you don't have this huge parabolic move and you have nice, steady, orderly price action, then just follow the price action. We always say SPY is bullish right now until it is not bullish. And right now it continues to be. Back to your earnings question, look at the run up. Obviously, Amazon is probably the number one pick for all institutions. And the reason for that is if you go back 4 years ago and you put $10,000 in Amazon, it is currently worth $10,000. It hasn't moved. That is a huge ceiling right there, huge pent up ceiling. But the fundamentals on Amazon have gone up exponentially in the past 4 years. So in other words, it is a significantly better company financially, fundamentally, now than it was 4 years ago, but it's essentially the same stock price with the same float. So that is why there's all this expectation that eventually Amazon will break through. If you were asking me as a long-term investor, what stock would you pick? I would say Amazon. But as a trader, wait for the move after earnings. Pete's going to go over Reddit. Sometimes you get a really good move, and you can go after a stock, and it becomes a good trading position, but not before the earnings announcement.
Well, we might as well take a look at Reddit. That is a post earnings gap up. You can see it on the top of, well, it's hitting every freaking search in the world today. Okay.
Mhm.
Post earnings searches, 52-week high, gap up, relative strength, volume, you name it. Every single person is looking at Reddit. So this is going to get into a couple of issues that people have. One big issue that swing traders have is everybody wants to buy low and sell high, buy low and sell high. That's a problem when you pick shitty stocks like SMCI and you're a bottom picker. Okay. There's a downtrend there, and the stock is in a downtrend for a reason. So I described that. I discussed that recently in some articles. Secondly, they can't buy a stock at a new high. Oh, Pete always tells me don't chase, buy dips, wait for dips. Well, there are times when you have to chase and you have to buy, but you don't have to plow in all at one time. RDT is a great looking stock, and this is one that you can consider for a longer term investment. Okay, so the reason for that is that you can see this is an IPO. So that's where it IPO'd, the stock pulled back, and then it got back to that high, and then now it pulled back again. This is a cup and handle formation on a longer term basis. Okay, so it IPO'd in March this year, and now the stock is getting through that resistance level. And then all of a sudden, we have this massive gap up. And we'll go into the 5 minute chart. We'll look at that. Mind you, I have not read anything about the earnings report. I don't know what their revenues are. I don't care. All I care about is what the stock is doing technically. It gapped up and it's preserving those gains. And when it blew through that resistance on a D1 basis, it did so in a magnanimous fashion. Okay. This is a huge flipping move. Well, that means it's more dangerous because it can pull back. There's truth to that, but this is a fairly young company. Everybody's still trying to gauge what that social media platform is, what's the value of it. I'm telling you that institutions after this earnings announcement are behind it 100%. And so this is one of those times when you want to come in and buy it with a starter long position. If you look at this stock a year from now or 2 years from now, you will recognize this as a good entry point. So I'm not loading up because we're just after earnings. So what might happen is you could get a small little pullback in Reddit. And again, I am not telling you to buy weekly options here. Please don't do that. That's stupid. Okay. After a gap up like this, but if you want to buy some stock, for sure, you want to buy some long term leaps in the company because you plan on holding it long term. Okay. Obviously, watch the implied volatilities and all. So the stock does have a chance to come back and retest this long green candle here, and those would be buying opportunities. I'd like to see that open from this long green candle preserved. It could even leak a little bit into this gap right here, but not much because this strength tells me buyers are aggressive. So if it pulls back, I'm ready to add to the position. If it continues higher, I might need a little time, but I would also look to add to the position on that type of follow through because now I have confirmation. Here, I have a suspicion that institutions are going to continue to embrace this stock and is going to continue to move higher. I need confirmation, not just suspicion. And when I start to see it tick higher, I can add to the position. I don't need to go overboard because in time, little dips and little retracements are going to tell me that buyers are still engaged. Why wasn't that dip bigger? Because buyers are in there buying every single dip. And you can go back and look at, well, APP was the last stock that I highlighted, and that was on September 15th, my weekend recording. I saw this, and there's your horizontal breakout. When I saw these three stack candles here on massive volume, it's like, oh yeah, okay, this stock is going to freaking go. And it did. And this was the tell, also a relatively, it's been around for a while, but the news on this was that they were really doing some creative things with AI, and that is what sparked all of this buying interest. But these are the candles that told you. So you're adding, adding, adding. Okay, now you've got a decent sized position on, and you're waiting and watching for compressions or dips. A compression tells you they couldn't even sink this thing. There's not enough sellers out there. The buyers, just a pause. Buyers are still in there, buyers are still in there. And this is what you see in the initial stages of a very big move. As that move matures, you're going to see deeper dips, and they will last longer and they will be more frequent. That doesn't mean the trend is over. It simply means that it's starting to mature. So Reddit's going to go. If you're looking for a longer term investment, I like it here, and I would add in the fashion that I've just described to you.
Hi there from Germany. After finishing the wiki, should I focus my attention on reading more books? The System by Pete. You should certainly read The System by Pete. Or should I focus on paper trading or both? Well, both. If you read the wiki and then you've seen the 10 steps, if you've chosen your broker, you feel you have a good handle, now's the time you start paper trading and start to journal. Make sure you have a good journal. Like I said, I use TraderSync. There are other journals out there. It's more of a familiarity thing. And start to see if you can hit those benchmarks. But never stop reading, never stop trying to learn. There's a ton of information in the system that Pete puts out. Definitely start reading that, but use your paper trading and see how it evolves over time. That paper trading is a gift. I like the Thinkorswim paper trading that they have. I think it's pretty good, and you get good fills on it. But that allows you to really focus in and don't, go, oh, I'm going to put in $1 million in there. Be realistic. If you think you're going to start trading with, I don't know, 10,000, 50, then that's what you should put in. And that's what you should practice on and make realistic trades with it. And then journal those trades to see how you're doing. But you should definitely do both. Any insight you could offer with confidence with swing trades would be appreciated. I struggle with some of the sudden gap up and gap down we experienced, even with strong stocks, so I hesitate to swing. Swing trading, we talk about day trading so much, but Pete, you and I talked about this so many times. Swing trading is probably a majority of traders are swing traders, wouldn't you say?
I would say 100x
Yeah,
day traders minimum. Yeah,
absolutely.
everybody swing trades. I mean, people have jobs, so they can't watch the market all day.
Yeah. So your confidence should come from your. I'm writing up a post now on SMAs, but I'm really actually devolved into a more deeper post. But the shorter term your trades, the more reliant you are on technicals, right? Obviously, if you're doing a very long term trade, you're going to switch more to fundamentals. You're switching to the company. But the shorter term your trades, the more you rely on technicals. If you're doing intraday day trading, then you're looking a lot at the M5, for example, and you're looking at VWAP and AVWAP, and you're looking at the intraday technicals, while still being very cognizant of the daily chart. But if you're swing trading, you're really focusing on that daily chart, and you're really looking at those levels of support and resistance. So obviously, if you're swing trading, your confidence comes from using and relying on those levels of support and resistance, and also making sure that the levels of support and resistance you're relying on are dependable. So you don't want to be, oh, this is the 20 SMA. Well, that can be blown through just because the market's strong in the morning. You want to be, looking at the strong levels of support and resistance on the daily chart, and take, if you have a gap up or a gap down in your favor, and you want to take that profit early in the morning, those are usually gifts. But if you gap through a technical line against you, wait for the market to settle. Don't jump the gun. But if it looks very clear that you are not going to recover that level of support and resistance that went against you, then you need to get out of the trade. But these swing trades, really spend your time focusing on the daily chart.
Yes, I agree with that. And I also agree with the premise of finding the fastest horse. For God knows what reason, people lock in on a stock. It could be Apple, it could be Tesla. I don't care what it is. Does the stock look like this that you're trading? If it doesn't, this is what you need to find. Okay. You are not going to get scared out of this stock because it doesn't dip. And anything less than this chart should rarely be considered. So, your biggest issue is finding that stock, because once you have it, you don't let go. You don't just start flipping out into other stocks because, oh, this one's so good that I've got to find something different now. Why the hell would you do that? Look at this thing. It is riding that EMA 8 like nobody's business. There is no dip to head fake you out of the position. There is no dip that should spook you. Okay? Find those best stocks. You don't need more than a half dozen of them. Trust me, those are going to be your best picks.
Someone asked here, can please do an analysis on CELH? Well, I'm looking at it and I see nothing about this stock that I like or dislike. I'm completely ambivalent about it. You have this huge drop, obviously, all the way up from 100. So you get the 70% drop in the stock since May or June. Now you have this stock sitting below its 50 SMA. It has been bumping up against it several times in the beginning of this month. It's tried. This stock right now, you have two lines. This is a perfect alert stock, which is very simple. If the stock drops below 28.20, it is a short. There's your first alert. 28.20, that is the low from 10.8. If the stock breaks above 33.42, but I would put the alert at 34 because you want a little confirmation there. Stock breaks above 34, it is a long. You set those two alerts, 28 and 34, and then you walk away. Don't think about it. Don't do anything with it. One day the alert goes off, could be tomorrow, could be a month from now. Great. You look at it and you might have yourself a decent trade. But at the moment, I would not touch that stock.
I would short the living hell out of it if I had a weak market. This stock is going down. There's nothing that tells me that there are any signs of life in here. I don't see any higher lows.
It's
Every
dead.
little bounce, every little bounce has been shorted. Every little bounce has been shorted. Every little bounce has been shorted. Every little bounce has been shorted.
Have you ever
I would
tasted
only
their drink?
consider it on the. I just did. You said it sucks, and I've got a summer place, and one of my kids' friends uh, bought some soda or whatever it was and left it there, and I went, "Oh, this is the stuff Harry says sucks. I think I'll try it." It just wasn't anything special to me. I didn't hate it or like it.
Yeah. Um, it's just, and there's so much competition in them. But anyway, yeah, if anything, it's a short, but I just set those alerts and, just walk away from that. Okay. So let's see here. Ram Kumar, what is your opinion on supplementing your system with the commitment of traders and see where the speculators are long too much and know that the turn is getting close, but not act, wait for market? I'm not exactly sure what you're asking, but it seems like a little bit of counter trend trading, trying to into it that you know, you look at a stock like, let's say, SMCI, and it's dropped so much, and now all of a sudden you see, waiting for a reversal. Um, Look, there. Here's where technicals are your friends. Usually, and institutions have a term for it. SMCI is in the penalty box right now. That's what they call it, right? Where do stocks like that find support, right? So right now, is it going to base it around 33? Well, given the magnitude of the drop, you're going to need many days, weeks even, of this stock basing there, basing at that support level. Only then will it really start to jump back up. So you need to look, and the same thing with stocks that jump all the way up and then they start to consolidate. And that also goes to a question that someone asked about the trade signals here, where they said that uh, where is it here?
Price compression
Yes,
after. Okay.
look at
I've got one
Amazon
up
Pete
here.
on the
So
daily there. I think that's a good example where you get a buy signal here on the daily chart. And I think it was what, August, somewhere August, late August. Then you get this August 21st buy signal appears in the daily chart. You get this compression, and then on September, then it kind of launches upward. Then you have that sell signal coming in on October 7th. Then you get another buy signal coming in on October 18th, another compression, and then boom, October 30th, which is today, you get this pop up here. So that might be an example, I believe, of what they're asking.
APP, I just went through that chart. So let me do that one because it's in such a strong uptrend. Yellow dots using 1-0 squeeze signifies price compression. There's your buy signal back here. There's your price compression. You're through that. So now you know that the stock has a path higher. You've got another price compression here. Stock breaks out, you get long here. So I hope that answers your question, but that would be the basis. Yellow dots equal compression. A green just means that it quickly broke out of that compression, just followed by a gray. Like here, you got a compression and then gray. That means it just kind of leaked out of that compression, not in a very strong fashion, but a green dot would mean that it really blew through that compression.
Someone had another question about option stalker right below that.
Let's see here. Can you
Alerts.
rephrase it for me, Harry? I'm trying to find it.
Yeah, I think he said here that off topic, but if you use Option Stalker Pro to set all my alerts, will all the alerts be pushed to the mobile app in case I'm not at my computer?
You would have to set up that push notification. And yes, we have documentation for that, how
Got
to
it.
do that. So yes, the answer is yes.
Um, oh, okay. Now I see. I didn't realize that the comment referred to the Jason Shapiro system. Sorry. The person before asking about the commitment to traders after a big move. He COT data. It's sort of it's a weekly report. The U.S. Futures, they put it out, and it kind of shows positions, large traders, future markets, and they use that system uses the data to identify. Okay, a large group of traders here are buying or selling, and it allows for a contrarian stance, right? Betting against the majority, right? When extreme positions appear. That I would not. I mean, that you say, would you supplement the system with that? Our entire system is the trend is your friend, right? You go with the trend. You go with the um, the institutions, and right in the concept of COT is a flaw, which is large traders, right? It's not traders. You see, it's not like you have this one individual out there that, occasionally for certain stocks, obviously, but it is institutions in there buying and selling. That is where a majority of your liquidity comes from in these stocks. It's not one person on Apple or one person on Microsoft. It's JPM or Goldman Sachs saying, we're going to start accumulating Microsoft or Apple, and they don't buy it all in one fell swoop. They will accumulate it over time, where you look back, they've accumulated 10 million shares or something over the period of a month. They didn't do it all in one day. The only exception is news-based or earnings releases. But this isn't individual traders. These are institutions taking stakes. So you do not want to bet against those institutions.
Yes. And so there was a question earlier. We addressed it regarding confidence in swing trades. And so here's an article that I just posted in the system. This is in the members only section, but let me just show you the basic concept here. So in the green area of this chart, this is the continuation phase. And as this stock is making a new all-time high, you are in bullish mode only. Your mindset is that every dip will be a buying opportunity. And I know that because of the previous trend strength that got me here. Okay. Bullish trends are going to die hard. The stronger the trend, the harder it's going to die. So any dip, I'm going to be viewing as a potential buying opportunity. Now, when that dip that you see on the right-hand side here, when that dip is long, deep, and it lasts a long time, that's a warning sign. Okay. This was deeper and longer in character than all the other dips. That tells me that there's some selling pressure coming. Then I watch what this bounce looks like. If it is brief and it is not tall, it is short, then that tells me that these sellers whap, 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 like whack-a-mole. They don't feel the stock is going to get back to the previous high. And that's why they're taking advantage of selling right here. You do not guess that a top has formed. You do not guess that there are a lot of bullish speculators out there, and hence this is going to be a good short right in here. You wait for that lower high double top. You wait for that deep drop. You wait for that wimpy bounce. Then and only then do you have a possible shorting opportunity. Because if you short too early, whoosh, this dotted line is a bullish flag formation, and it has a much higher likelihood of developing than a double top lower high because of that previous trend strength. I hope that this answers your question, but so we're waiting and we're constantly evaluating these dips. How deep? How long did it last? Brief and shallow. Good. I'm in buying mode. Here's another dip. Brief and shallow. Good. I'm in buying mode. I'm adding to my swing trades. And the whole way up, my average cost is way below the current price. So I have lots of cushion in that trade, lots of confidence to add to that position over time. And these same patterns, you can use them on an intraday basis, but it's going to be more difficult for you to do that because you don't typically get these long sustained moves intraday. Yes, sometimes you're going to get a bullish trend day or a bearish trend day. Those are the exception. And yes, add, 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 add.
So, all right, Michael, let's see if we can get through some of these here. Michael Berbert, no, SMCI does not report after hours today, number one. Two, take a look at AMPX. Do yourself a favor. Next time you're at your car, open up the door, put your hand in the door, and then slam it really hard. And remember that pain. That's the similar type of pain you'll experience if you continue to look at stocks like AMPX. Stay away from that stock. Why? The damn thing is a penny stock. It is worth what, $1.50 right now, and why would you even when you're looking at stocks like Reddit, and we're talking about these great trades, why would you even look at a stock like that? That is just, I guarantee you, I absolutely guarantee you more than I guarantee that you go into a casino with a $5 voucher that you are going to walk out broke. You absolutely will lose your money if you continue to look at stocks like that. There is no doubt, zero doubt, 100%, 100% positive. You are going to lose all of your money, all of it. Stay away from that stock. Moving on. Elf.
Yes, consistent lower highs here. Every one of these bounces failed and rolled over. The stock can't even get above the major moving averages. And if we zoom out, you can see that longer term downtrend. So just real quick, I had a question on HE. I don't want to lose that one because someone was asking. There's nothing here on HE to trade. I mean, just this stock is dead wood. Yes, it's got a higher low double bottom, but it's got a lot of work to do before it gets through those major moving averages, and it would have to do so on convincing volume. Nice long green candles. It is a utility company, okay? They are not making nano chips for AI. This is a boring industry, so the stock does not move very much.
Elf is a short right now, but it's not really a short. It's in compression. So if anything, it's a short. But this thing is in compression at the moment at 110. You could probably day trade it. It broke below VPOP right now. I would not swing trade out, but if you wanted to short it for a day trade, that could be fine. FSLR again is a possible short here, but it broke below its 200 SMA today. And right now, yeah, I mean, I like FSLR. However, it's above VWAP today. It kind of filled the gap of its initial larger drop. So I wouldn't touch this until you get another break below VWAP on an intraday trade, which is at 192.54, and that's a long way down. So wait to see. Look at that 200 SMA. It's at 202.67. If that holds and the stock cannot get past it, it may be a decent overnight short for FSLR. By the way, my pick for the week, I think I'm going to go, and this is a bit of a risky pick because it is a bit news dependent and you have earnings coming out, not for this stock, but for similar stocks. But I like Dell. I like Dell is obviously connected to the SMCI drop right now, obviously being seen as a beneficiary to that company's demise. But if you look at, you don't get a much better bullish chart than what I'm seeing on Dell right now. You have a clean break above its final SMA barrier, which is the SMA 100. You have a break above the previous highs going all the way back to July. You have it going into the gap from July 17th. I mean, this thing has checked off pretty much every single technical bullish indicator you want. However, it will be somewhat news dependent. If SMCI comes out and goes, hey, everything's actually fine, yeah, Dell will probably get whacked a bit. If the tech earnings aren't as strong, Dell might drop with those. But looking at it, I cannot ignore how good that chart looks. What do you think of Dell, Pete?
Love it. Really, really nice. Yep. Like you said, checkbox, 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 checkbox. And a couple of things. Hover over the E 1127. So you've got almost an entire month for the
Mm-hmm.
stock to continue to perform before you have to worry about earnings. That gives you the latitude to structure all different sorts of options trades. You've
Bullish
got
put
this
spread even.
horizontal. Oh, sure. Yeah. You've got this horizontal breakout. You could do a bullish put spread below the 100-day moving average. Yeah, that is just a very solid pick. And you're not chasing. It's barely gotten through this horizontal resistance, but it's clearly through it. So watch it today. Make sure that it closes above that horizontal resistance. This looks really good.
Let's see here. So when someone asks you,
Just-
should they take profits in their PGR long-term swing, which I assume that they were long on, it looks to me like the stock is beginning to pull back here, breaking below its 50 SMA, heading down. If you're in profit on this stock, you don't have earnings into January, I would probably consider reallocating my uh, money elsewhere into a better stock. If you're looking at a longer term swing trade, this one here does seem to be begging off a bit.
I would agree with that. And this horizontal compression here is kind of the tell that the stock has just not been able to advance. I'm not bearish on the stock by any means. This, as far as I can tell, is just a really nice, strong uptrend. The stock is simply taking a little bit of a pause right in here, just like it did in here. Okay, this is just a horizontal compression. And once the stock breaks out of that horizontal compression, goodbye. And here's another example of a stock that's in a horizontal compression. You get your buy signal and the stock takes off. So yes, this is a good place, I would say, to take profits. And you can see
Yep.
that also, red line below zero, real relative weakness.
Um, what's the difference between a dip and a catching and a falling knife? Well, I mean, a dip is orderly. A dip has decent volume. It's not like you're getting relative volume of 3 or 4. You're getting average to above average volume. You're getting an orderly, steady decline over the course of days. But the difference is that in dips, the technicals will hold, right? So you look at Amazon. You look at Amazon on the daily chart, and look at Amazon on September 26th, and then you start getting this kind of orderly decline down to the 100 SMA where it holds, and then on 10.3 falls below, 10.4 goes above, falls below it again for 2 more days, then goes back above, and then it starts to recover. And so you look at that and you go, okay, you had this dip, it tested the 100 SMAs, or the 100 SMA there, the 100 SMA held, it went into compression above it, and then it started back up again. That is a dip. SMCI today, that is a falling knife. You get this sort of news event, you get extremely high volume, and in technicals can go fuck off because it doesn't matter, right? The technicals, the support and resistance, are get crumble when you get these type of falling knives because they are driven by something other than ordinary course of business. They are driven by some news, and that news could be earnings. That news could be, oh, the accountants say, wow, you're even too fucked up for me. I'm out of here. One way or another, the news is driving the price action, and then technicals take a back seat. So dips generally will abide by technicals. Falling knives will not.
Yes, and so yeah, that is a big substantial drop in a downtrend. The difference between a dip and a drop is that a dip is brief and shallow, and you see that rebound right away. It's very, very temporary. A drop is much more substantial. You've retraced a significant portion of the recent gains, and that recovery takes a very long time to unfold. And so when you're looking at dips, obviously you do not want to buy dips in a stock that is in a downtrend. And in an article I recently wrote, I referenced uh, Meta. And so here you have a stock that has been in a very strong uptrend. Okay. Big gap up. That entire gap has held. And now you get another earnings announcement right here. This is a considerable drop, or is it a dip? Well, it kind of preserved what happened the previous quarter and it held all of these gains. So the 200-day moving average is lending support. I would be watching for some support in here. And if it can get up off of that 200-day moving average and into this gap, I know that this stock has been in a very long term, strong uptrend. Now it's above it. I can take a position, starter position here. I've got support nearby. Now I'm going to be watching for additional confirmation. Aha, compression, buy signal, breakout above the 50-day moving average. I can add here on confirmation. Yes, this was good, a good buying opportunity. Yes, this was a dip. That is the process that you go through mentally.
Does MU look like a bull flag to you? I mean, well, technically, yeah, but the flagpole is from earnings, right? And you have this really long flag out there. What it looks like to me is a technical fail. Um, you get the strong downward trend line starting from the gap down on July 17th. So the top of that connects to the top of the earnings of 926, and then it goes and connects again to 1017, 1018, and 1021, and again 1025. That coincides with the SMA 100. Right now, this stock cannot get above the SMA 200, let alone get above the SMA 100, which is above that. So it is in kind of a purgatory at the moment. This is the clearest set alert stock that you can kind of find, which is put your alert at 110. If it breaks 110, you have yourself a nice long. Until it breaks 110, you might have a short if it breaks below 99, which is the SMA 50. But other than that, this is a wait and see, set your alert type stock for me.
Yep, and I agree with everything that you just said. I'm going to set an alert. I'll show you how to do that. D1 basis. Whoops, we want to select the SMA as what we're setting the alert on. When it crosses above the 100-day moving average, which is the blue line, let me know. Then it might be of interest to me. If the market had any kind of weakness here, ooh, does this look like a good short to me? Because it's being rejected at that 100-day moving average. Now it's fallen below the 200-day moving average and AVWAP E. With any kind of market weakness, this stock is already showing you relative weakness. This is much more likely to go down than it is to go up in the short term. Does that mean that you buy puts now? No. You've got a market that's doing this. We're in striking distance of the all-time high with big news coming out. No, I would need to see the market roll over hard, tell me that this uptrend is over with, and then I would start looking for really weak stocks that have had weakness way before the market even rolled over. That's a winning combo.
Would AMD be a good buy now that it's dropped after earnings? We kind of just went over this, didn't we? Do you know whether, I mean, you're looking at AMD, is your idea here based on anything other than, well, it dropped a lot, so it maybe this is a good point where it'll go back up. Maybe the selling is over. If that's your logic, then we would have just like stadiums filled with millionaires in the world because everyone has that logic. Do you see a bunch of millionaires around you? Like it doesn't work, right? You this could be the very beginning of the drop. You have no idea whether or not institutions are looking at this, looking at the guidance on AMD and going, this stock is valued at 120, 130, whatever it is. And the selling will continue down there. It could be they're saying this drop is exaggerated and we're waiting for it to find support to buy it again. Either way, you will see based on the price action. You will see, does AMD base out at 150? If it does, it then needs to get above the 1500 SMAs that it fell below. It fell below 3 SMAs after earnings. And after that, then you can start seeing a recovery and then consider it might be a long. What everyone is so afraid of, and there's another question about this as well on, when the market is up, I'm looking for stocks that are relatively strong, but I feel like I missed the move on most of those. Am I supposed to look for stocks that are relatively strong when the market is weak? This whole, I'm going to miss the move. Yes, you are. Why? Because institutions get the move. Sorry, they do. That's the benefit of spending billions of dollars on research and information. If you spend billions of dollars on research information, you get the move. The institutions get the move. What you get are the breadcrumbs off the move. What you get is the hope that the move continues and that you miss the first part of the move, but you get the rest of the move, which is even bigger. but you don't get to have the initial move. You have to settle that in your mind. As a trader, you aren't going to get the initial move. That's not for you. That's for them. And guess what? They deserve it because they're spending the money and the time and the effort. It's their entire business model to get the move. You're getting the scraps of the move and hoping that can turn into something bigger.
Oh,
That's your job.
the scraps of the move are phenomenal oftentimes too.
Yes.
So, AMD, you've got, look at these trend lines. You have a long-term wedge formation right here. You also have converging moving averages. The 100-day and the 200-day moving average are very tight to each other. This stock would be more of a short to me than a buy just because it's broken below these major moving averages and AVWAP-E, but I don't have a lot of downside to that lower trend line. Okay, so this is of no interest to me at all. And when Harry was talking about different moves, let me see if I can expand this chart again. This is something that I just wrote about in the recent article. You'll notice that this pink shaded box where you would start shorting, it doesn't start up here at the high. It starts all the way down here when you have confirmation that there has been a technical breakdown below a 100-day moving average, below an upward sloping trend line, below the 50-day moving average. All of that is intact. That is a nice move, and you would add here. Those are not breadcrumbs. So here, the box should have started right here. This is where you start taking a long position. This is where you add to the long position. Uh-oh, double top, lower high. I'm not shorting here. I'm waiting for that breakdown. Now I have confirmation. This is the move. This is the chunk of the move that I'm trying to take advantage of, okay? Here, same thing. The green box here, we're through horizontal resistance, lots of support, lots of lows here, another horizontal level here. Okay, I can start to nibble here because I can feel pretty confident that support is there, but I'm not buying down here because I don't know. The next leg could be much, much, much lower. So I wait for that confirmation. Now I know institutions are in there buying. They are going to lend support to this stock, and that's my move. You're trying to take a piece out of the middle of the move. You are not trying to play guessing games at the extremes.
Where do you anchor VWAP? What moving averages do you always use? 50, 100, 200. It's not that I mean, that's what I use, but that's what the institutions use. That's what the majority of people use. And I'm talking on the daily chart. Anchoring VWAP is usually to the previous earnings. And how impactful are resistance support levels from years ago? It depends, right? If it's just sort of like a consolidation or whatever, most likely no. If it's a long-term trend line, that's meaningful. If it's an all-time high, that's meaningful. So like you pointed out, this person here, Winsley points out DAL, right? So if you look at DAL and you go back to 2000, as they point out, you go back to 2019 and 2020, yes, you have this sort of high, right? This barrier high at around $62, $63. That, if you just think about it, you had a whole bunch of people, and you look at the volume there, buying the stock up there. They have been at a loss since that day, right? Since it's dropped from that all-time high, these people have not been in profit. Now it's beginning to approach it again. So it becomes a question. A lot of times you have, all right, I've held this stock now for 4 years. I've been looking at it at a loss. I now have a chance to get out, break even. Some investors are going to take that. So if it breaks through that level, then what you have is investor confidence. You have investors saying, now I've waited 4 years. I believe the stock is going to start getting higher. And when it breaks that all-time high, you have no bag holders above that. Right now, you have nothing but bag holders sitting there at 63. So let it break through that. And then you can look at it and say, okay, this thing could really start to go. But it really depends. Long-term trend lines matter, all-time highs matter, all-time lows matter. But, if you're just looking at this sort of 4-day consolidation back in, 2018, no, that's not going to make a difference one way or the other.
Oh, I got a question I'm looking forward to answering right now.
Hit it up.
Uh, oh, a while back, Pete said that Dell was a short, and now you say it's a buy. What changed?
Damn
But
you,
I
Pete.
always I always look at that, with a raised eyebrow because everybody's always wanting to find flaws in what I do and what you do, quite honestly, Harry. But that comes with the territory. And it's a fair question. When you read my book, the difference between my book and every other that's been written is you can go back over the course of the last 15 years and watch videos that support my thinking, or in the last few years because that's when I've been writing it. And I know exactly the context that that trade took place in. So, all of you, please pay attention. Market first. This is a very deep drop that we had late July, early August. This got my attention. I took some time off. I put the Dell pick out there. I said, this is a potential short, but here is what we need to see from the market. Here's what we need to see from the stock. We need to see the market bounce, which we are waiting for that bounce, and we know we're going to get one because the trend has been strong. I want to see that bounce fail below the 50-day moving average. And then I want to see the market roll over because that will tell me that this move is legitimate and that sellers do not feel they will have a better opportunity to reduce risk. So they are selling right here. Did that happen? No, the market rallied. Crap, we don't have a short setting up. This never would have happened if sellers were aggressive. Dell Computer, big drop below all of the major moving averages. At the time that this was happening, okay, August 5th, August 5th, okay, the stock had broken through the 200-day moving average. Please go back and watch that exact video because I told you we need the market to fall short of that 50-day moving average, and the stock needs to be rejected from the 200-day moving average when we test it. Needs to fall below it because that would be a sign that this deep drop has lots of sellers in it. And then we could expect another new low, take an initial short, add on a breach below that horizontal support, continue to add as the stock drops. We didn't have that. The stock went right above the 200-day moving average. Translation, no trade.
It also feels like that question's coming from uh, a fundamental point of view, and I hope you realize, Clueless Cassandra, that we're not speaking about these companies and these stocks from a fundamental perspective. It's almost as if you're asking Pete, well, you liked Dell as a company a few weeks ago, and you don't like Dell as a company now. What changed? He's ambivalent about Dell as a company. He's looking at the price action. We're short-term traders, which means your position on a stock, you could be bullish on Tesla today and bearish on Tesla 3 days from now because it is short-term trading. That is the whole idea behind it. So we're not making our comments based on a fundamental perspective of the stock or the company. So I hope you really understand and internalize that idea.
And I'm not getting down on you per se either, because I love to be challenged. I get challenged constantly. Every time I open my mouth with a pick or a trade, I expect that I'm going to be challenged on it. Okay. But if you go back and you dig and you say from a few months ago you had this pick, that tells me you probably shorted it and you shouldn't have because you didn't follow the instructions. Or you could have gone back to that date when you put the trade on, and you could have gone back and watched the video to see exactly what I thought at that time and why I felt it was a good short. And then you would have picked up the information that I'm conveying to you. So, yeah, please go ahead, challenge me, challenge Harry. We're used to it. It's what we need to do. But if you're going to do that, then I'm going to defend my position. Okay. Because there's a reason that I do everything. It's a well thought out plan. It doesn't mean that every trade is going to work out, but I can defend my decision making at that time.
Um, Someone asked really quickly, I do better when swinging. Should I stick to swing trading over day trading? In your opinion, I open about two positions a quarter. If you're only doing two positions a quarter, I would recommend you stick to swing trading if it's working for you. Day trading requires an intensive amount of concentration. It's not something where you can just sort of do it and then walk away. You need to be following it because you're really looking to get in and out of a position the same day, if not maybe a day later. But if you're doing one or two swing trades a quarter, then that's probably what your time availability can handle. And there are ways to be quite successful doing that. You just have to, hone in those skills. And then as time becomes available for you, you really need, then you can start concentrating on other forms. Someone mentioned TTD. Um, TTD looks great. You do have earnings on in a week, but it's a little wild. Keep in mind that Trade Desk will respond to Meta earnings tonight, though. So Meta earnings, Trade Desk, that's going to be tied together. But looking at the chart, TTD, I think it looks like a pretty much what Pete was talking about. That's the type of pattern that you want to see looking for a long. Just be careful of the Meta earnings tonight.
And let's see here. When the market's up, I'm looking for stocks with relative strength, but it always seems like I'm getting in those trades too late, like the relative strength has already been there. Should I be looking for relative strength when the market is down? Yeah, down markets are great because that's exactly when you have the best ability to search for relative strength. When everything else is down, here's this one stock that's actually holding its own, and it's doing so very, very well. And that's why I do like gaps down in a bullish market, because you know that there's a chance for that gap reversal to take place. So you've got really good upside. But the other good part about it is that that dip in the market tells me that those buyers are steadfast and they are there. So, classic example this morning, I showed you the chart earlier. That relative strength that was there, I was able to observe on a 5-minute basis right in here on Microsoft. Market fell apart. I knew I liked the stock. It was above the 200-day moving average, above the 100-day moving average. Had nice, strong price action yesterday when the market was up. And so there's your market dip right on the open. What did the stock do? Sure, it gapped higher. It told you that it wanted to go higher, but right here, it held the high from the previous day. There's your green relative strength. That is your entry point. You retrace half of that long red candle. That's a good sign. You poke above VWAP. Yes, yes, yes. This all looks good. Boom. There's your move. So, um, looking for relative strength when the market is weak, that's the biggest reveal that you're going to have. When the market is strong, obviously you want stocks with relative strength. To feel that you aren't chasing, you've got to be a little bit more selective, and you have to find stocks that are just starting to break out, ones that have not run super hard and super far. I think Dell is a good example of that Harry gave today, because it's just starting to get through technical resistance.
Um, what is our daily routines? Anything we could share? I mean, Pete's a prepper. I'm not a prepper. I used to give talks to thousands of people, and people would sometimes prepare a PowerPoint, whatever. I wouldn't even look at it before I got up there. The more I prep, the worse I do. I generally don't. But I roll out of bed probably at around 15, and I have a cigarette, I have a coffee. Uh, I don't even look much at the pre-market until I pop down right in front of my monitors here, and then bam, everything comes up 6:30. The rest of the, I always read before I go to sleep. I read around 3 to 5 books a week, so I'm an avid reader. But I don't think that really, I mean, it's more of a mindset thing. But I'm not much of a prepper, Pete. By the time I sit down, Pete has written like, 10 paragraphs about where we are in the market that's in the chat room already. That guy's been up from, whenever and just plugging away at it. So, two different styles here.
Yeah, very different. You probably go to bed later than I do. I'm like,
Yeah.
and by 9 o'clock, I'm straining to stay awake. I
Yeah.
figure that anything I might possibly do after 9 o'clock at night is not going to be good for me the next day. I tend to get up very early, 5 o'clock in the morning. I used to work out. I felt that really helped wake me up, endorphins. I'm ready to go by the time the market opens. But I've got so many other things that I'm working on, including market commentary and research, that I'm not able to get those early workouts in. But I spend my time doing research, raw news feeds. I'm pulling information from a lot of sources, looking at economic releases, getting my thoughts together, writing my pre-open market comments. As the day unfolds, yes, I do enjoy my coffee. I don't take lunch breaks. I kind of enter this intermittent fasting. I eat after the market closes. I feel like I've got much better energy levels. I'm much more aware, possibly because I am a little bit hungry. And then after the close, I will have something to eat and I will go for about an hour to sometimes an hour and a half walk, clear my head, and I'll come back in and start going over the day and start looking for some new prospects the next day.
Okay. We still have a lot of questions here, but we are a
Wow.
bit
Yes, we
over in
do.
time.
And we still got something I want to talk to you about, which is next week at this time, we're going to be talking about the elections. So
Yes, we
I
are.
don't know if you want to share some insights on what you think about the election and the market impact.
It's such a tough thing. Look, obviously, I'm not going to pretend there are certain stocks that people are going to bet and play, right? If you think Kamala Harris is going to win, then Tesla and DJT are good shorts. If you think Trump is going to win, then they're both good longs, right? Um, there's a couple of things that you wouldn't think of, which is like Fannie Mae is very much tied into a Trump win. If Trump wins, and Fannie Mae could double in price. But if you look at it in terms of an overall market perspective, um, the market's not only looking at who wins, who doesn't win, and to a certain extent, it prices in pre what they feel. But it also looks at the Senate composition, the House composition. They might not like the policies of one candidate, but if it's a deadlocked Senate where you have a Republican Senate and a Democratic House, for example, then there's a higher degree of confidence that nothing will happen or get done. Whereas if you get a candidate, Democratic or a Republican candidate elected, and then the House and the Senate is Republican, well, now any impact of whatever those policies are, in that case would be tariffs, is going to be reverberate throughout the market, right? Bitcoin is going to respond. So you're going to have these responses. A lot of those responses are going to be already priced in. And it's very difficult to tell what the market is or is not priced in. Clearly, the last 4 years, the market has been stronger than ever, right? And that is with a Democratic White House. But it was also strong 2016, 2020. There's a question of the Fed independence. Will the Fed remain independent? Well, if Trump wins, he said that might be in question. If Harris wins, it's probably business as usual with the Fed. So many things that if you're going to play it, admit you're gambling it. That's my perspective. The only thing I might play or do here is there good kind of strangles, like a Tesla strangle, right? Or DJT strangle, something like that, or even an MSTR strangle with Bitcoin. But if you look what the market makers are doing, they're kind of saying, yeah, we're on to you. We know what you're doing. Look at the IV on those stocks. They're well aware that those stocks in particular are in for a big move, and they're punishing you with that IV. Might I do a strangle butterfly on Tesla or something like that? I might do that. That might be something I'd consider, because I do feel a stock like Tesla will have a big move either way. Probably a bigger move to the downside if Harris wins, then it's already made a huge move to the upside. So that might be priced in a bit if Trump wins. But it's going to be interesting. There's going to be volatility. What do you think, Pete?
Yes, well, to your point earlier, the elections, they tend to have a bullish bias, to be quite frank. And out of the last six of them, four have had rallies after the election. That is, in my belief, it is a relief rally. You have this compression, which the market's basically been in a compression since August. You can take a look at the chart and say, well, no, actually, we had this big drop in here. You look at that low and that low, and until about a month ago, we were basically at that same level, and we are right now. It's just kind of been drifting higher. I feel that we could see a nice little relief rally. We've got year end, we've got earnings behind us, then we've got the FOMC next week. So I don't think that there's anything to really spoil the market right now, with the exception of a possible recount. So if the vote is super, super close and we have to go through the recount process, we saw that in 2000. That was one of the times out of the last six that there was some market volatility. But the market volatility wasn't initial, like the day after. It wasn't until they realized that, oh, there are hanging chads and whatnot. Process got long and dragged out. In 2008, the day after the election, Obama got elected and the market sold off. That had to do with the financial crisis that we were in. We were in the heart of a
Mhm.
massive financial crisis. So it wasn't really election related. It was just like, oh, the shit's hitting the fan here. So in general, I think that the election is it's going to have a little bit of a relief rally, a little bullishness to it. And that's regardless of who wins the election. It's not what analysts are saying. You have analysts that are saying if Trump gets elected, that's the end of democracy and the market's going to tank. And you got the same thing on the Kamala side. You have people saying, oh my God, if she gets elected, it'll be the worst thing that ever happens to the country. It won't have an immediate impact. Okay. They still have not taken office. And there's this lame duck session that's going to take place. And it's going to take a while for them to implement their policies anyway. So I wouldn't look at the actual election as something that's going to have dire consequences overnight for the market. Although when Trump did get elected in 2016, as I recall, I looked at the market Tuesday evening and went, oh shit, this market's getting nailed. By the time I turned my computer on the next morning, the market had recovered all the losses and I think it was moving much higher. So
It's
um,
also so
it'll be,
difficult to separate the rhetoric to what can actually be done. Trump's out there saying, I'm going to tariff everybody to hell. And Kamala's out there saying, I'm going to tax the corporates, to this much. Those things have to pass the Senate. Those things have to pass the House, right? Oddly enough, they both are pretty much the same idea, because a tariff, people think a tariff is the other country pays, right? It doesn't. You're tariffing the company, right? So if Microsoft is getting $100 million worth of screens from China, and they go, here's $100 billion, here's your screens, thank you, China, and their 20% tariff comes on it, they're still giving China $100 billion, but now they're giving $20 million to the US government. The company pays the tariff, and then the prices get adjusted to the consumer accordingly. If a corporation is taxed, right, and let's say it's 20% taxed directly to the corporation, that also hits their bottom line. Prices get adjusted accordingly. Neither of those things could happen, certainly not to the extreme, unless you have a Senate and a House along with it, which is why if you get a divided Senate and House, usually the market looks at that as more stable than having to assume, oh, now we have to really take into effect what will this corporate tax, what would these tariffs actually have the impact on these companies, because it looks like these things might pass. Very few things actually pass, right? All you can go back in time to promises of all politics to the beginning of the century and the other century. They don't. You need consensus on both houses of Congress, and so that's going to be almost as important as to who wins the presidential election. Is it going to be a divided Congress or not?
Yes, and that is actually where the election could be a little bit sticky. Is some of these House and Senate races are very, very, very tight, and the lead or the majority in the Senate is one right now, and it's a handful in the House. So I think those races will be very important. And then you got this looming debt ceiling again in December. So regardless of the outcome of the election, both parties are going to have to get together and kick that can down the road again. So I'm not looking for a huge initial reaction. We'll see how things settle out. I would not be bailing out on the market simply because we got
Yeah.
the election coming up. So kind of stay the course. Know that this trend has been kind of floating higher on light volume. We've got big news. The earnings that we get this week, the economic data points that we get this week are going to be much more important than the election. And then we've got the FOMC week from tomorrow. That's also going to be important to see what the Fed does. So major, major news coming out in the course of the next week.
Someone asked me on, I think it was Twitter, what would I do if I in charge of the economy? And one thing and not in politicians, it's a third rail for them to touch this. But I think it is absolutely criminal that you have Social Security, Medicare sitting there as the largest bucket of money pretty much anywhere in the world that collects no money, that makes no money. Pensions get invested. The first thing I would do, that money should be invested. I still, for the life of me, do not know why it just sits there and gets drained and isn't invested, or at least people aren't given the option. Would you like would you like this to go into investment bearing or non-investment bearing? Most people will, just like pensions, 401ks, would choose investment bearing, and that money can then at least make money. It drives me crazy. That's trillions of dollars over the years just sit there to be drained rather than letting that money work for you the way it does everywhere else.
Well, the one thing that I would do differently in terms of finance is I would be selling 30-year bonds like there's no tomorrow. And they should have been doing that for the last 10 years. If
Hmm.
they did that, they wouldn't have to worry about kicking the can down the road because our average maturity is about 3.5 years right now. And we're having to constantly roll that debt over. And I believe we've got about $7 trillion to
Mm-hmm.
refinance over the course of the next 8 months or so. You had better hope that the people buying our debt are still interested in buying it, because if they aren't, guess what happens to interest rates? They start creeping higher. And with a Fed that has signaled that they are going to be on the path of easing, you would not expect TLT to be pulling back like it is right now. Should be going higher because they're going to be lowering interest rates. But if you look at TLT, that has not been happening. It's been drifting lower. So anyway, who cares? I just look at what stocks are doing
Yeah.
inside of a month and what the market's doing inside of a month, and I go with the flow and follow the technicals.
Well, I know there's a lot of questions we haven't got to yet, but we are approaching the hour and a half mark. So we will get to these, we can next week. Um, Anything else you want to add there, Pete, before
Did
we?
have a Yeah, I did have a couple questions. What level of membership do I need for Pete's book? Where can I buy Pete's book? The book's not published. I've got some pretty hardcore writing to do, about 20% of it left. I plan to finish it by April. Real easy. Take the free trial. Come in, take the free trial. You'll have access to it for a couple of weeks. You should be able to knock through it if that's what you focus on. It's very long. but I think it'd be probably the best thing you could do during the trial. And that's about it. I think otherwise we've kind of made up for the live session that we didn't have last week.
Yep. All right, everyone. It's going to be a fun week. Keep an eye on those earnings. Keep an eye on any trades you make that are connected to the earnings. And, we'll see as we head into what will be a very interesting period of time for the market and the world going into a week from now.
Yep. Trade well. Thank you, Harry. We'll see you in
Thanks,
the room.
Pete.
All right. Bye now.
Thanks, Will, behind the scenes. All right, everyone.